use your own car for office work or have a company car? Then this tax update is for you. Let's break down the 2026 income tax rules and now understand why your company car could mean the higher tax. So the perquisite value assigned to the employer provided car has remained unchanged for several decades. So the draft income tax rules 2026 has revised significantly these values to align them with the present day's cost of fuel, maintenance and chauffeur services. So where the employer bears the running and maintenance expenses, the monthly perquisite value for cars with the engine capacities up to 1.6 liters increases from 1800 per month to 5000 per month. For cars with engine capacity above 1.6 liters, the value increases from 2400 to 7000 per month. In both cases, the chauffeur perquisite value has been increased uniformly from 900 per month to 3000 per month if chauffeur is provided. Where the employee bears the running and maintenance expenses, the taxable perquisite value have been revised upward. For cars up to 1.6 liter, the value increased from 600 to 2000 per month, and for cars above 1.6 liters from 900 to 3000 per month, again with an additional 3000 per month for chauffeur if applicable. Overall, this changes provided a higher taxable perquisites for the employer provided vehicles regardless of who bears the running cost. This revision reflects the inflation and actual economic value of the car benefits and is expected that it will increase the taxable income for the employees who are receiving the cars once the draft rules are notified and become effective. Now this slide explains the changes in exemption limits for the motor car perquisites where the employee owns and uses the motor car for both official duties and the personal use, and the employer bears the running and maintenance expense. So for vehicles with an engine capacity up to 1.6 liters, the monthly exemption limit increased from 1800 to 5000 per month. In addition, where a chauffeur is provided, the exemption value for the chauffeur service increased from 900 to 3000 per month. For vehicles with engine capacity above 1.6 liter, the exemption limit increases from 2400 to 7000 per month, with a chauffeur exemption similarly enhanced to 3000 per month if applicable. So the draft tax rules are favorable for the employees who uses their own vehicles, and they can substantially enhance the exemption thresholds for the motor car perquisites. Now the perquisite value for other automobile vehicles such as two-wheelers or non-motor car vehicles where the employee owns the vehicle and the employer bears the running and maintenance expense. This vehicle is used for both official and personal purposes. So the draft income tax rule 2026 proposed a significant increase in the exemption. Under the draft rules, the exemption limit is enhanced to 3000 per month from 900 per month. So, as a result, the higher exemption directly reduces the taxable perquisite value for employee using their own non-car vehicles for official purpose even where there is mixed personal use. So the key takeaways: car perquisite values have been increased from 2.5 times to 3 times from the existing one. The chauffeur value have been standardized at 3000 per month. Employee-owned vehicles, higher exemption. Employer-owned vehicle, higher taxable perquisite. Reflects inflation and real cost of benefits and applicable once the draft rules is notified or finalized.